Hey everyone, happy Friday to you. It's Rob Foglia and Jessica Klein coming to you live from Foglia Properties, or at least from our homes here for Foglia Properties at Keller Williams Realty here in Nashville. And today we want to discuss basically what is an accidental rental property, or like an accident, possibly there are some accidental landlords out there. We're going to go into kind of what that is and how you should evaluate it in the type of market that we're in. You ready to jump in, Jessica, and get started?
Yep.
All right, cool. Let's do it. And honestly, the biggest reason that this topic came up for us, aside from the fact that we both have a passion for real estate investing, has been just the changing climate that we're in with basically with COVID-19. And you can see this article is a little dated from back in June, and yet at the same time, I think it brings up a great point as to the potential struggles that some landlords have faced throughout COVID-19 and the coronavirus with the high unemployment rates, et cetera, et cetera. Like we've talked a lot about in our videos, how the market affects buyers, how the market affects, homeowners as, basically with forbearance and all that good stuff. And at the same time here, this is a whole nother animal that we're talking about. And so we're gonna dive into what an accidental rental property is, and then basically again how you should how to evaluate it. And so, to me, an accidental rental property, and I don't know if I coined that term. I like to, in a way, think I did, and yet I probably heard it at some point. To me, that it's basically somebody who owns a rental property, or it is a rental property that you didn't go into it from the start thinking this is something that I'm going to use to build my wealth and get passive income from. It's something that you kind of somebody backed into as an investment property. Does that make sense, Jessica?
Yeah, absolutely. And I think along with that, in many cases, like if you know you're going to be an investor, then ideally you've set up your criteria, you have certain features and a certain return that you're looking for. And when you're, in situations like this, you don't have that luxury, and that can bring up a whole host of different situations than a purposeful rental property would.
Well, yeah, exactly. Well said. Because when we coach our investors, or when I look for an investment property, I have a certain criteria I'm looking for, and I coach my investors to start identifying what that criteria may look like. So whether it's location, price, rate of return, the specs of the property, there's so many different things that go into that, and that's not what we're going to get into today. And yet, it's I've heard so many stories and helped so many sellers over the last few years that kind of backed into owning a rental property. And a couple of scenarios are maybe they bought the property, say, 10 years ago when the market was still kind of going down, and they had to move right away. In fact, I'm thinking of somebody, I won't name any names obviously, and yet I'm thinking of somebody that I helped in Barnes Crossing at one point, that they bought it's a townhome neighborhood over in the Cane Ridge area, and they bought their townhome brand new in 2007, I believe, 2006, 2007, right before the market ended up going down. And their family was growing. They ended up moving out of it. It became a rental property. They never had any desire to own rentals. That wasn't their goal. And yet they needed to get something else. They couldn't resell and make money, so they rented it out to avoid foreclosure or short sale. And long
Mhm.
story short, they had no desire to get to have a rental property. And
Yeah.
these are some, and what we're going to get into, some of the questions that I used to help them evaluate if it made sense. Another scenario, though, could be somebody who maybe just bought their home and they had to move. Maybe they got relocated for their job, or they had a growing family and had to move as well. And maybe they were going to be really short on equity in the home because they just bought it, and they turned around, instead of reselling it, they turned around and rented it out just to cover the mortgage. Like, that's a very common phrase. So is that clear? I feel like I'm rambling. Does that make sense?
Yeah, I think that makes sense. And the last thing you said there is what sticks out to me, that in many cases, these accidental rentals aren't the most profitable things. They're just enough to cover the mortgage. And so, yes, you're getting a little bit of equity. There's, having a rental property, especially when you don't have a property management company or any profit, can be a lot of work. And they're not always, the best situation to be in.
Exactly. Well said. Because I mean, I can't tell you how many times I've heard somebody say to me, "Well, it's around. It's profitable. It makes $50. It makes $100. Something like that a month." And I mean, just think about it for a second. They say it's profitable, makes $50 a month. Yeah, I mean, technically that month it may be profitable, and yet if they have to replace a water heater that year and that's $600, well, there's their whole
Yeah.
profit for the year. If you have any other hiccups that come up, you're all of a sudden losing money.
Right.
And while obviously owning rental property, there's risk and there's reward. Typically, if you're evaluating it right from the start, you're mitigating some of that risk because you're making sound purchases. And a lot of times, the accidental rentals they've been backed into, meaning they became rentals by default, and so they're not always the most sound. And the reason we wanted to bring this up right now is the market conditions that we're in. We've looked at this type of graph over and over again. So yeah, I won't go too deep into it. And what this is though is it's basically months of supply. And what I've got pulled up here is just Davidson County, and I pulled up homes that are basically in the 200,000s. So between 200 and 300,000. And the reason why I wanted to pull this particular price range up is a lot of these accidental rentals that I work with, I talk to, they're in this price range. They maybe were a first home that somebody said, well, they make it look really cool owning rentals on HGTV, so let me try it. Or I know a buddy who owns rental properties, let me try it. And they don't quite. It's not their thing, and yet they're doing it almost to do it. And I do believe that, and let's in fact go just a little further out, you can see kind of the trend of the market that we were in. Get rid of COVID for a second, because I think COVID's going to be a blip on the radar, and then whenever COVID ends up going away, we'll probably start to see this trend come back. It's almost more like just a pause in the trend line that we were seeing, in this general vicinity. Anyway, though, you can see that the market was on the rise in terms of months of supply, in terms of becoming more of a balanced or a buyer's market, even in this hot price point. So even though we may be talking about multiple offers on some homes and homes that are selling within the first couple of days, that's not going to last forever, and that's not on every home. And so it's time to take advantage of this if you want to. And so I'm going to throw out a couple of questions that I would ask people to think on. If you are an accidental landlord, if you own one of these accidental rentals, and you're like, should I sell it? What makes the most sense for me long term? The first question I would ask you to think about is, do you want to own rental properties? First and foremost, like, does this fit into your long-term outlook? Do you enjoy it? Like, that's probably an even better way to look at it. Or does every single time the first of the month comes around, are you dreading, is my renter going to pay me? Like, I've got to pay that other mortgage. Oh, I've got to pay the landscaper who's mowing the lawn. Are you dreading it every time the first of the month? If you are, maybe it's a sign to cash out while the market's still strong. The second question I would ask you to consider is, do you have at least 20% equity in the home? Jessica, do you know why I throw that percentage out there?
I don't actually. I know you need about 20% down if you're going to be buying a new property.
Buying a new investment.
Yeah,
exactly. And that's exactly why I throw that percentage out there, because lenders, like mortgage lenders, they have, like the mortgage industry, they've kind of quantified that, basically that 20% down as a benchmark for a rental property, for an investment property. And having that amount of, what they call having that skin in the game, having that amount of money down on the home. And the reason I throw that out there in terms of 20% equity is it allows you to kind of ride any waves of the market. So I've got months of supply pulled up. Let me just pull up sales price. And you can
now, let's just real quick, months of supply for anyone who hasn't seen in a while the video where we talked about that. That's if all the properties that are on the market today stayed on the market, no additional came on and none came off, how long would it take for all the buyers to buy them up, essentially?
Yeah, exactly. And this is right around 3 months of inventory. That's a strong seller's market. If you go back forever, and go back to when the market was down, you can see, this was 10 years ago, 10 months of inventory. That was a strong buyer's market. So yeah, that's why I bring up the market being strong, because we're in a low inventory market, and this is what makes it seem low inventory. Now, in terms of riding the wave, the reason I share that with that 20% down, and in fact, let me go to all price ranges, and just for Davidson County, I'm not sure how this will look going back 10 years. You can see that there was an up, and there was some down. There's little ups and downs here, and we've been in a strong appreciating market really the last 6 years.
A very long time.
Too long, if you ask a lot of economists, that we've been overdue for a decline. Regardless of speculation, that's not why I'm bringing that up. The reason I'm bringing this up, having the 20% in your home, is it allows you, if say, because what the average price point in Davidson County last month was 314,500. Well, just say in the next year prices do decline. I don't think they will decline, tremendously, but just say they do, and say they declined 10%, which I mean wasn't abnormal during when our market was declining 12 years ago. And so because of that, say it went down 10%. Well, if it went down 10%, you still got 10% equity in the home to where you can get out from it is my point.
Mm-hmm.
Where if you only have, say, 5% in the property, you just bought it and then you say, oh, well, screw it, I'm just going to rent it out. Well, if that's the case, if the market goes down, you're going to be opening yourself up to potentially being underwater in the home. And it's just not a good situation to be in. So that's why I throw the 20% equity out there. The next question I would ask is, what's your rate of return on the property? Or specifically, I advocate for the 1% rule in my rental properties. So what that means is, say you own a property that, let's go back to our old, $200,000 to $300,000 price range here, and go back to this because when we're only looking at a certain range. Long story short, say you own a $250,000 home right there in the middle of this price range. 1% of that, you would hopefully want to see 1% of that amount be your rental income every month. So not your profit, just your rental income. So you'd want to see $2,500 a month coming in off of that rental property. And what I'm getting at is, if you own a $250,000 home and you're getting $1,200 a month out of it, you're probably barely covering the mortgage. And if you're covering the mortgage, depending on your loan, and it's something that may not even be profitable. On top of that, though, it's not giving you the rate of return that real investors look for. Not to say that accidental investors aren't real investors, but I'm sure that makes sense. Does that come across?
Yeah,
right?
and I would say like intentional versus accidental.
That's a good way to put it. Yeah, intentional instead of real. So no offense to any accidental investors out there.
Because they're absolutely, like, I think the reason that we're going through these questions is, just because it's an accident doesn't mean it's not working. And you just have to actually ask these questions and see if it's a long-term solution for you, or if it's just kind of, keeping you at zero, and you just have this extra house with extra work and stress. Because we don't want anyone to be in that situation. Now, if it's working great, then awesome, like that's a great way to have some additional income and to build your wealth.
Well, exactly. And that's why these are questions for you to consider if you're in that situation and you say, well, does it make sense to sell? What do I need to do? So again, is your rental value, is it 1% or close? So again, if you own a $200,000 home and you're getting $1,700 or $1,800 a month in rent, you're probably profitable a couple $100 a month if you're enjoying it. If you have 20% equity, and I've got one more question that I'll get to in a second. And yet, even if you're a little under 1%, it's profitable and you like it. Yeah, I'm not saying to sell that property. So I'm glad you said that, Jessica, because I don't want this to come across as in just like sell. That's not what I'm saying. What I'm saying is you've got to look at it from the viewpoint of an investor. And these are questions that a true purposeful investor is going to be asking themselves about their investments. And so, again, if your rental value is much less than 1%, I would encourage you, though, to sell, move that money over to an investment that's going to see a better rate of return. And then the last question, though, that I've got is, would selling the property now help you accomplish a goal in the next 3 to 5 years? And there's a purpose behind that timeline. And it's, again, going back to really just this long-term months supply that we've seen. And let's just go to all price ranges too to see it. And what I'm getting at here is, if the market does kind of go up as we were, in terms of become more of a buyer's market in the next couple of years, we were expecting. I know there were a lot of real estate economists who, come like March and April when all this stuff started, all the COVID-19 stuff started, people were expecting the market to become a buyer's market like that, it seemed like, or at least start to show signs of it. And we're not really seeing those exact signs yet. Like this is a very slight uptick in supply. So it's not really transitioning that way yet. And at the same time, it very well could in the next couple of years, 3 to 5 years. We're overdue for it, is what I'm getting at, just like we said before. And so if the market is kind of nearing its peak, and just to jump back to sales price here, if this is kind of about the peak of where we are, and you've got some sort of goal, say in the next 3 to 5 years. And what I'm getting at is, I know a lot of investors, whether accidental or intentional, though a lot of investors own rental properties for certain reasons, possibly to retire, possibly to pay for a kid's college, possibly to kind of level up. They own a couple of houses and they want to buy a commercial complex or an apartment complex. Like, there's a lot of different reasons to own investment properties. And the question that what I just brought up, would selling now accomplish that 3 to 5 year goal? You should be looking to cash out while the market's as strong as it is. And we just don't know if 6 months from now or 12 months from now, if we're going to be seeing this strong of a market, or if average sales, instead of being at 325, will be closer to 300, just say. I mean, that very well could be the case, and months of supply could go from 3.4 to could jump up to over 6, just like it was in the past. And if that's the case, you no longer have the leverage as the seller, and you may have missed that window to make this as easy as possible for you. Does that make sense?
Yeah, it does. And so often we're, people think that they're timing the market, and really what they're doing is lagging behind what it's doing. Like Gary Keller's, he does this, he's the head of our company, and he does this gesture almost every time he's on stage, where he goes like this and he says, okay, tell me where the top of the market is. And if you say here, well, oh, I was actually going to keep going. Or if you say here, like, oh, well, it was actually up here, like, you're hearing all these things in the news, not now, but just in general. Like, say you hear that the market's going down, that's because it's been going down, and now we can see the data that shows it. So what we advocate as a team is to look at what the data is right now and act on what it is right now, not what you think it's going to be, or what you're hearing in the news.
Well, exactly. Well said, Jessica, because you're right. Like, we don't know what the market's going to do in the next 3 to 5 years. Nobody does. And yet you may know, like, each one of us knows what our personal goals are, at least hopefully have some personal goals, and you have an idea of what you were looking to accomplish from that investment property, or from any wealth building goals that you have. So if it is, again, you own that property because you're going to pay for that kid's college, and your kid's they're a senior, they're going into their senior year. Well, maybe it makes sense to sell now while the market's strong. Or, I'm sure y'all know what I'm getting at, and I'm sure it's translating. So again, let's throw those 4 questions out that we had written down beforehand, just so that you can, if you're made to the end of this video and you're thinking, well, hey, what questions do I need to be asking myself? Do you like owning rental properties? That's probably one of the first points, because if you don't, that's a whole nother story. Don't do what you don't want to do. It's a short life. The second question: do you have at least 20% equity in the property? Again, that's for your security. That's to make sure that you can ride any waves if it goes down, and be able to come back out the other side. The third question being, does it hit that 1% rule, or is it very close to it? So again, the actual rental amount being at least 1% of the price that you could sell it for now, or even if you wanted to be conservative with it, maybe the price you bought it for. So maybe you have owned the home since 2014 and you bought it for $160, and you can get $1,600 a month, even if it's worth $250 right now. That makes sense for you. And then the last question: would selling the property now accomplish a goal that you have over the next couple of years? So anything that we missed, Jessica, that we wanted to get into on this topic?
No, I think that was everything. And just, if anyone has any questions about any of this, or if you're looking to get into investing, or, whatever it is, we're always happy to answer these questions. And there are no agreements, and there are no, it's just, we're here for your information, whether you're going to work with us or not.
Well, yeah, exactly. And I mean, obviously we'd love to work with you on it. And at the same time, I know there are a lot of people that own rental properties to grow their wealth. I mean, I'm one of them. I know, Jessica, you want to own rental properties at some point. And we work with a lot of clients that are that way as well. And we're never going to push somebody into selling something just because, we want to put a sign in the yard. That's not it at all. The reason for us bringing these questions to you is to help educate, to help you just think of things as an investor. Because again, this is for the accidental landlords, that own accidental rental properties out there, the ones that didn't buy that home in 2012 thinking that this was going to be my ticket to wealth. It was, I'm just going to buy this home because I'm looking for a place to live and don't want to rent anymore. And, so we're never going to just tell you, hey, sell this property because again, because we want to sell. No, we're going to give you these questions to help you identify if it makes sense. So
Absolutely.
awesome. Well, I appreciate y'all checking this out. As always, just like Jessica said a second ago, we're here to help. So give us a call if you have any questions, 615-591-5665. You can leave a comment on this video if you have any questions as well, whether you're seeing it on Facebook or check out our YouTube channel. You can also PM us at Foglia Properties or shoot us an email if that's the easiest thing for you, info@foliaproperties.com. But I appreciate y'all getting on here and checking this out, and we'll let you get back to your amazing Friday. Have a great week.
Thanks, guys.